From the trenches trading. Today is Sunday, November 16th, 3:51 p.m. I'm outside. I hope that you guys can hear me good. It's a windy day, and yeah, I got the windshield on my mic, so I'm gonna find out today if it actually works. All right, let's jump into what we got going on this week. So the government shutdown is over here in the United States, and news is scheduled for the most part. Events are scheduled. This one here is tentative. That's what I said for the most part, right? So Monday, nothing crazy. Tuesday, nothing crazy. Wednesday, November 19th, we got the FOM meeting minutes at 2 p.m. All right. What else? Thursday, okay. Thursday, we got some stuff happening. Early in the morning, 8:30 a.m., we got the hourly earnings, non-farm employment change, unemployment rate, Philly Fed manufacturing index, unemployment claims, and existing home sales. All right, so we got a lot of things happening between 8:30 and 10 a.m. on Thursday, and then on Friday, flash services PMI, flash manufacturing PMI. Off the top of my head, I'm not actually sure what this is. Let's see. Oh man, what's going on? 1 second, guys. I think it's raining. It just started raining, and it's bad for my computer keyboard. Oh man, they're just small drizzles, but they're drizzle enough. Yeah. All right, I'm gonna have to take a pause. I don't know if this is gonna cut my recording off, but gotta take the show inside. Bear with me a minute, folks. Don't know if this is gonna cut my recording, but we're going inside. No, it started drizzling. The rain is coming down. Yeah, it sure did. Alright. Alright. Here we go. I'm gonna set up. I know, I'm recording though. So I gotta set up shop. We live. We live over here. Alrighty. Let's see what's happening. Looks like the recording is still live. Thank you guys for your patience. Gotta keep this keyboard dry, you know. Alright, so what is this? Industry expansion, level of diffusion index based on surveyed purchasing managers in the manufacturing industry. So this is straight up manufacturing stuff, right? Yeah, I guess you could guess that with the name. And then services. This is the services industry, so I would imagine, you know, services. All right, guys. Let's jump into the stuff that we all want to know about, right? The markets. So, let's look at a daily chart. It'll be easier to see this. So the markets came right in early September, broke through this resistance point, shot up to TP2 up here. Late October, pretty sure I've been talking about a retracement since this time, and we finally got it, right? Prices came down, they bounced pretty nicely, made a lower low, and they came down again. So this is something that I would be mindful of. Let's put something on this. So let me use a trend line. Let me turn off the magnet. Okay, so prices made a low, which was lower than the all-time high, right? So let me see if I got something. I got a lot of templates saved, you know, so to make my life easier. Here we go. All-time high, ATH. Okay, so we got an all-time high, and then we got a lower low. I'm gonna put an LL here for a lower low. All right. So we got a lower low. I mean a lower high, not a lower low. Lower high made after the the pullback. Let me get this back on my computer. Here we go. Okay. All right, cool. So markets made an all-time high, all right? All-time high. Then after the all-time high, we had a swing low created, which was lower than the previous swing low. So a lower low. We made a lower high. And you know, we're yet to see if a new lower low will be made. What I do want to see actually is where this exponential moving average lines up. I want an 8, and I like to make this white. Okay, so the moving averages have not crossed bearish yet. Let me show you all what I mean. So you see this white line, the 8 exponential moving average is above the 21 and the 34, basically all the way since about here, back in May. All right, so those moving averages are stacked positively. All 3 of those by May 12th. And then all 4 with this red one about May 28th. And since May 28th, all 4 moving averages have been stacked positively. Now, just because the 8 is pointing down does not mean it's going to cross necessarily, right? It was pointing down here, and then it came back and basically rounded out, and everything stayed positive. So that could very well happen. The moment that this moving average, the 8 exponential moving average, crosses the 21, meaning the white line crosses the blue line going down, to me, I'm looking for bearish plays. I'm no longer looking for playing things to the long side. All right, so you see right over here, the moving average is crossed, and then what happened? The markets dropped for, what is this? This cross happened in February, and the markets basically stayed all the way down until May. All right, when the moving averages crossed over again in April. This was April 28th. So from February 25th, 2 months, 60 days of downward plays. And so these times when the moving averages are coming down and getting close to flipping are just interesting, right? I think they're better personally for like day trading. You want to get in and out and avoid the crossover happening overnight. You know, you wake up and the market's down 2% or whatever. So things are looking interesting. Why I say that is because look over here, right? We had a high made, we had a pullback, and then the next high was a higher high, and the next low was a higher low compared to this one. So higher high, and then higher low, and that kept happening all the way up until here, where we finally made a low, and then we made a lower high. So I would say things are getting interesting in the sense that one can't predict what's going to happen next, but it looks like things might be turning bearish. Again, it's way too early to make that call. Things could absolutely bounce and turn around. You know, this next week could be super green and we can make new all-time highs. This low is also higher than this low, so we could get something where we start making higher lows and lower highs until it gets really tight in a channel. Let me show that with some trend lines, right? It could be something like this. and price can squeeze, right? We got two squeezes down here, so price can get really tight and then break either up or down. So we don't know what's going to happen just yet, but just definitely something to be aware of. And I would be mindful of the fact that, a lower high was made. So that's the SPX. Again, things could just get tight until exploding. This is also, this time of the year is known for the Santa Claus rally or the holiday rally, end of the year rally, whatever you want to call it. So the stock market does tend to shoot higher into December, into the new year. That doesn't necessarily have to happen, but that is historically what happens. These are the Qs. Same thing, right? TP1 was hit down here back in August. TP2 was hit here in October, and now we're pulling back. Something interesting about the Qs is that a lower low was actually made. So for the SPY, that didn't happen. We had the lower high, but we had a higher low. This one had a lower high and a lower low, right? The low here is 597.17, and the low here is 598.67. So, and if you look, the 8 EMA and the 21 EMA are only about 15 cents apart, right? Looks like they've crossed already, but they haven't. But they are extremely close to crossing, all right? So showing you here that tech might be ready for a little reversal. Again, these lines have been stacked positively, all of them since here in May, and at least the 8s and 21 here in April, and the 34 here later in May. Okay, when these things tend to cross, especially on a daily chart, you tend to get big movements. Here they crossed, and you got a lot of whipsawing, up and down movement, still within the pattern, right? This is a pattern, right? Bump, 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 bump. But the moving averages crossed 8 below the 21. Lower lows were made, lower lows were made, lower highs, and then finally the Qs broke out of that. And what did it do? It traded it within this pattern before breaking lower. Okay, so, oops. There are early warning signs. Typically when these things break, they break. Right, see here, break lower, then this thing proceeds to drop 20 points or so, 30 points. And when they break higher, even though it came back down, higher low, higher highs. All right. If I'm going too fast, you can slow it down, watch it again, and research any terms that you don't know. Use that to help you understand what I'm talking about. Otherwise, I hope you're following and this all makes sense. So those are the Qs. Let's check the diamonds, Dow. So we had a higher high made and a higher low. So the Dow, according to this pattern, looks like it still wants to push even higher. Also, remember, the Dow has only hit TP1 here. It has not made it to TP2 up here at 504. So let me show you real quick. SPY didn't hit TP2 exactly, but it is close. The Qs hit TP2. See, first green line, second green line. But the Dow has only hit the first green line. The second green line is up there, and then the white line up there. And I believe it's the same thing for IWM, the Russell 2000. So not even, the Russell hasn't even hit the first target, the green line. But the Russell is already bearish, okay? So we have our 8 exponential moving average crossed below the 21 over here, November 6th, and then beneath the 34 over here, November 12th, 13th, right? So any names in IWM, I would absolutely be playing to the bear side. Names like Oklo, names like RGTI, and you see these things are bearish, APLD, right? Very bearish. 8 has crossed below. This thing was squeezing, fired short. Okay, so that's what's happening. So you see the names within the index tend to follow the index. So if you see the index breaking, you can go into those names and play them short. So that's the IWM, that's the indexes. Let's look at the VIX real quick. So the VIX, or the volatility index, the higher it goes, the lower the market tends to go, and the lower the VIX, the higher the market tends to go. The VIX exponential moving averages are stacked positively, 8, 21, 34, 89, and the VIX has been making higher highs, right? Higher low, higher low. This was a higher high, higher high. Okay. If we put a fib on this, we can put a fib on anything, honestly. Let's go into my templates. Quick. All right. We see the next target up here is about 2388. If the VIX makes it up here to 2388, you can guarantee that the market's going to slide. It's going to be a lot of fear in the markets, and it'll be a great time for shorts. All right. So you definitely want to look for those opportunities. All right. This is A. This is a nice setup I found that I like, that I enjoy. Let's see here. So Monday, the 24th, so not tomorrow, but 2 Mondays from now, they report earnings in the evening. I would like to see this name push higher into earnings. Looks like a double bottom here. All right, like a W. Okay, and price is very close to what I prefer to use as my buy zone. I'm going to close this 8 EMA. My preferred buy zone is going to be here from about 145.53 to about 142. Okay, so 142 to 145.50. That's my ideal buy zone. I wouldn't want to buy lower than that because you see this was resistance here, 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 and then now it's support. So if the price drops underneath this 142, it's kind of back in this zone again where these were. Let's just make it this a different color. Right? So I don't want to get back in this zone because to me that means price is going to be deciding down here what's going to happen, and it could go very much lower to test this EMA, or it could even drop even lower than that. So I want to use this first zone here and basically stop out underneath 142. Okay, so for A, my stop would be 142. More specifically, a close under 142. That's my stop loss. And then in terms of take profits, you know, ideally new highs, 3 ATR, 5 ATR. However, you can still use a fib to get an idea. Okay. See if there's any confluence. So major resistance coming in around 149, 150. Major resistance, let's say 149 to 150. And then potential targets. Let's just number them. TP1, say 153. TP2, what is that? 155. And then I'm gonna say TP3, 157 plus. And let's look at some contracts. What do these contracts look like? Oh no. Okay. Okay. So this week's contracts are pretty ugly. Because of the earnings, this week's might be enough to get some action. If so, I would recommend, or I would suggest, I would purchase rather. I'm not recommending or suggesting or advising anything. I'm not a financial advisor. Before you invest your money, you should talk to a financial advisor. This stuff is risky. You could lose all your money. and you shouldn't risk more than what you can afford to lose. That being said, if I wanted a more aggressive position, I would absolutely look at these 145 calls expiring this week. 1121, 145 calls. Let's see, 1121, 145 calls at, what was it, $4 or less. Or I would get the 1219, 150 calls. 1219, 150 calls.
Dada.
Yes, my son.
What are you doing in there? You have to go
550 or less. I'm working,
go
baby.
to Dee's house.
I'm gonna come out there in a few minutes, okay? All right, so these 1121 calls, 45 calls are gonna be more aggressive,
Dada.
and these 1219, 150 calls are a little bit more moderate.
Can I do that one?
I'm working, son.
I'll
Okay.
do that one.
Take it and go out there. I will say the price closed at 146.
Oh no! What?
So if you want an actual
I'm coming.
conservative play, these 145 calls will be better. It's just you're gonna have to spend a little bit more premium.
No, what? No.
So 12, 19, 145 calls at what, $8 or less, right? They were like $7.90. Yeah.
Wait, I did a
So I'm gonna say
I got Tina.
conservative, moderate, aggressive. So I would say this like this. The 145 calls are better because they're already in the money. The 1219 calls are better because they have more time. So the best call is going to be the 1219 145 call. The 1121 145 call is more aggressive because you only get a week on it. But you'll be in the money. So you'll be in the money and the premium is cheap. So there you go. That's A. Next we got AFL or AFLAC. Let me just go back. I didn't even look at the monthly or the weekly charts just to give y'all some perspective. So look, this tends to be a strong resistance area here on the, what is this? The weekly, the monthly, right? So price gets either rejected here, and at one time it was supported up here for a little bit. On the weekly, plenty of space, okay. So 155 is where the resistance gets interesting. Something to keep in mind. All right, AFL. So on the monthly, oh, this is a nice chart. Look at that. Wow. So this is my favorite kind of chart to trade, right? We got a nice trend higher, price stops, consolidates, and then we got some squeezes. They beat earnings about 2 weeks ago. They beat it real good, 40%. By 40% in terms of the earnings per share, and the revenue, they beat it by 8%. So this is awesome. And price closed, or not closed because this is this current month, but price is currently up here near all-time highs. So the monthly looks really good. So is the weekly, right? Last week, we got our first squeeze firing off. Let me move this thing up. There we go. So dots were red all the way from December of last year. This thing was in a squeeze and a consolidation. And then last week, it finally popped off, okay? So this is something that I'm really interested in, especially now with the market's looking like they want to either turn bearish or they're already bearish, right? IWM and the securities within that index are already bearish. I showed y'all a few names. QQQ's, Dow, and the SPY are looking interesting. The Qs, I believe, still look pretty bullish. They made higher highs and higher lows. And then the SPY made a lower high but a higher low. So it might be starting to squeeze, and then I believe the Dow, I don't remember the Dow. Let me look real quick. So the Dow made higher lows and higher highs. So the Dow looks good. Yeah, it was the Dow that looked good, not the Qs. The Qs made a lower low and a lower high. So the Qs look the worst. Dow looks the best. SPY is second best because it made, even though it made a lower high, it made a higher low. And then IWM looks the worst, quote unquote, in terms of bullish, right? This is bearish. All right, and AFL looks mighty fine. Off this earnings beat, price shot up from 108 and it's currently sitting at 114. And price is still making higher lows, okay, and higher highs. So this looks really good. That's the daily. I want to find a setup intraday. Here it is. Here it is. Ladies and gentlemen, we found a setup. Okay, so price, I would want to get in from about 113.60 to about 112.40. I want my purple box. All right, so we're gonna say, what did I say, 112.40 to 113.60. So this would be my ideal entry for this chart, 130 minutes, about a 2-hour chart. Let me show you. 2-hour chart looks essentially the same, right? I just use a 130-minute chart because I get 3 even candles for the day, right? 9:30, 11:40, 150 or 1350. And each day you get 3 exact candles, okay? So this is the entry. Again, I would stop out underneath this level, probably under 112, as that becomes a new level, right? Price here was rejected, was supported. 112 seems to be the area. So I would stop out on a close under 112. And for take profits, we want new all-time highs. I mean, it's not a secret, right? What was the high this month? 115.84. That's the high. That's the highest high. 115.84. All-time highs. And what did that look like on a 130? It's right there. Okay. So I would play this 2 ways. I would either play this on a pullback if price happened to fall into this area, or I would play this by jumping in on a break over the all-time highs. You know, this thing's already up here at all-time highs. I can imagine it just wants to continue to push higher. AFL. So this week's contracts, I'm not a huge fan of. If I was going to get any, it'd be probably these 115s. The 114s for next week I like better. Let's see, what do these contracts look like? Those 115s, the $60 spread is a lot. 55, 60, 25, $45. That might be my best bet. Let's see. A 45 spread for December. No, that's 65. Excuse me. Think about December 19th. So 45 here for the 115s, or the 55s, December 19th. Yeah, I'd only play these probably. So what's that? 12.5 or 12.19? So 12.5, 115 calls, or 12, what, 21 was it? 115 calls. No, 12.19. So these are going for $2, and these are going for $1.50. At $2 or less. $19 or at $1.50 or less. Take profits in new all-time high territory. I think I spelled territory correct. Yeah, so that's my play for AFL. I love where it's at. I love what the chart looks like. And I love the fact that price has gone from there to here. 8% in 11 days. That's a move that I could get behind. All right, AMGN. So we got our first month with positive shift momentum. That's what I'm seeing. They beat earnings Tuesday, November 4th. Price shot up lovely. Look at this. In 3 weeks, price shot up 20%, 14 days. Absolutely beautiful. My question is, how high can this thing go? So I think, yeah, okay. So this is all-time high here at 346.85. And it hit 345.84. So it didn't make new all-time highs yet, but it got darn close, right? You could barely tell that it didn't hit there. You have to zoom in to see. So the weekly squeeze in, here's the daily, 195, no, 130, no, 78. Here we go. So we got our first squeeze here on the 78-minute chart. It might only get two. Look, the last time we only had two, a red dot and an orange dot, and then price shot up from 321 all the way to 342 and then 345. All right, got a little retracement, and now price is here consolidating. This would be my ideal buy zone. This is 329 to 337. 329 to 337. The reason I would go past the 21 here is because this is the point of control. So that means that this is the area where the most buyers and sellers are at. So if price opens up here, I'm willing to begin purchasing up here. And you know, I'm happy to scale in as the price drops. I prefer to scale in as the price is going up to make new highs, but it is what it is. Again, I want new all-time highs, so anything over this 346.85 is perfect for me. I feel like this is kind of dark. I need a new color for the 100 percentile. What color? Maybe orangish? How does that look? I'm not a huge fan, but it is easier to see the numbers. Let's see. Let me see how I deal. Let me save this. Quick. Yes. All right. So let's see some contracts. AMGN. This was, what kind of chart was this? 78-minute. Obviously, if you go lower, you'll find more squeezes, like the 1 hour chart here. It's got like 7 dots. And prices at that 21 EMA. So this might be more your speed. If you'd like to find a more developed chart ready to make a move, right? Like here, a few more dots, and then bloop, price shot up. I prefer to play the highest chart that I can play. All right, AMGN. So I would absolutely get at least minimum 19 days. I would prefer to get these December 19th, 33-day expiration series. 340s or the 335s. If this is too much premium, you could always run a spread. So you buy vertical, okay, and then here's your spread. So it's a 5 wide spread. Pay 248. It's essentially paying half the price. So what that means is you're risking 248. The most you can lose is 248, and the most you can make is 252, which is the other half of the spread minus the premium paid. So this is a 340, this is a 335. So the total difference here is $5. If you pay 248, then the most you can make is whatever $5 minus this would be, which would be 252. So if you paid $2, the most you can make is $3. If you paid $1, the most you can make is $4. The more in the money you are, the more you're gonna have to pay for the spread. The more out of the money you are, the cheaper the spread will be. So for example, if I get these 355s, buy 360s, you see the spread is $1.13. So I can make up to $4 on the spread, but the probability is a lot lower, right? This has to get over 360 for me to make money, versus right here, it has to get over 340, which is only $4 away. So I'm risking, basically I'm risking 250 to make 250. If I was going to do this, I would do the December 19th series if I was going to do the naked calls by themselves. So paying the $8.95 or paying the $11.50. If I was going to do a spread, I would go down to either December 5th or November 28th. I feel like more time with naked calls is better for me personally, but when I run vertical spreads, I prefer less time. So these 335s by 340, I could play these for 235 or even the November 28th. So let's see. So the same thing, 5 wide, except the price is 255. So 255, you're risking to make 245, a little bit less than a 1-to-1. You could also just put in the order for 250 to see if you can get a fill at 250. I would prefer these setups though, 12 days or 13 days for a vertical spread. All right, that's AMGN. This is Google. Let's see. So Google is essentially up here at all-time highs, which is beautiful. All right, now we're getting a setup. We got plenty of squeezes here. The one thing I don't like is that price is underneath this previous consolidation area. So this was the previous area and price basically closed right below it after dropping underneath it on Friday in the morning. Then price closed in the afternoon just slightly out of the zone where it's been closing over since October 30th. Okay, so it's been 2 weeks and price finally broke and closed out on the bottom. Let's see what the 8 EMA is doing. So it didn't quite cross just yet to be officially bearish, but I don't want to buy anything in this area because, you know, this area is basically this area, right? Price can easily go from 276 to 262, which was this where these candles played at. So maybe going down to a lower time frame and playing it short is an idea. Doesn't seem like there's a setup down here. Okay, here we go. 30-minute chart. So 30-minute chart is it's got a squeeze, got a setup. All the moving averages are stacked negatively, which is good for, puts. Price just has to do something different for me. So let me first clean this out. Okay. And I would do the same just in reverse. So I would want price to bounce up to about 280, 278. What was that, 50? 278, 30. To 280 would be my ideal entry. Okay. I would stop out over 280. So if the price starts closing over 280, that's my cue that I'm wrong. Stop out on a close over 280. And then for my targets, be like this, just in reverse. Nothing changes much. Major resistance, 274 to 273, essentially. And then potential targets, TP1, we got 268.5, TP2, we got 265.8, and then TP3, 263. I want to say plus, but maybe I should say minus. So 263 or less. I'm going to say minus just so that there's no confusion. Plus, I feel like means higher, but this is lower. So 263 or less. Maybe I should use the or less sign. 263 or less. I think this might be my first bearish setup that I set up for you guys here on YouTube. This is not my first bearish play, obviously, right? I've been trading for about 6 years now, so nothing new for me. But since this thing broke down under this zone again, that price has been in since the end of October, and the moving averages are stacked negatively, I'll be playing 30-minute chart on Google to the downside. All right, let's see what these contracts look like. 30-minute chart, I'm happy to go right here, November 28th. And again, you'll be buying up to about 280. If you notice, on the bullish side, these contracts, about $2 here, a little bit out the money, 290. Price was at 276. Actually, no, look at this. This is what I just noticed. Price here is at 276. Price after hours is at 287. So price actually jumped up. So the price is actually not down here anymore. Price is actually about up here. 287 is about right there. So it's probably no touching Google until the market opens. Excuse me. Give me 1 second, guys. Oh. Okay. So seems like Google stock is actually popped up in after hours for whatever reason. Here it is. Google plans to boost its AI spending by 112 billion next year, part of a $1 trillion total by major tech firms, impacting its cash flow and asset positions. Google's Project Suncatcher aims to enhance machine learning in space, planning to deploy 2 prototype satellites by early 2027 to test its hardware in orbit. Signed a 15-year deal. Total Energy signed a 15-year deal with Google to supply 1.5 whatever kind of hertz that is of renewable energy from the Montpelier solar farm in Ohio, aiding Google's data centers and carbon-free goals. So super bullish news for Google. Again, Google's at 287 here, so just seeing that now, I wouldn't touch it. You know, Google's actually up here, and it's probably going to shoot up to 300. But if you were going to play that, you'd need a setup. And because the price shot up so much, you don't have that. So I'm just going to scratch Google. I'm going to keep it on my watch list just to check it out during the week. But there's not much to do with it until price kind of settles. Okay, so they beat earnings. Great. This is ew. Here we go. This looks like a setup. Starting to squeeze. Price looks good. I mean, it's up here right at all-time highs. No, it's not at all-time highs. It's far from all-time highs. All-time highs are up there. Oh, it's right here at 382. So that's interesting. We got a 78-minute squeeze. I like this. I love this. And they beat earnings. Okay, let's see what the contracts look like. So these are not the best, especially these January series. These are pretty ugly. December 19th. This one's not horrible. It's a 40-cent spread. These 85s are actually the best, right? Only a 20-cent spread. Yeah, this is the best bet right here. 12.19, 85 calls at 340. So we're gonna say 12.19, 85 calls at 340 or less. I would like to target 100 or par, as they call it back in the day. I think ew can get to par. My stop would be basically underneath this support. You might have seen it there when I had the marker, right? But look, this was resistance, 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 and then support, support, support. So this 85 level would be my support. So my stop loss would be a close under 85. There's the contracts I want, and I would target a move over 100, so 100 plus. All right. Par. What does the daily look like? Daily looks good, looks healthy. What's the price extensions out of this squeeze? I'm curious. Out of this pattern, rather. 85, 89, 93. Interesting. Yeah, super simple. I'd play it off this 78. So an entry could be all the way down to 85. Ideally, you want to get in at 85. And as long as the price does not close under 85, I'm happy to sit in this for all 33 days of the contract to see if this thing doesn't make a move over 100. LVS. So that's the daily, that's the weekly, that's the monthly. 195, 130, 78. There we go. So 78 has a setup, but the 21 and the 8 have crossed, right? Yeah, see the 8 crossed under the 21. That's like the first bearish sign. I mean, since late October, everything was stacked positively. And this tends to be an area where prices get rejected, right? 65, rejected, 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 rejected. So, we got a doji up here. I'm not too fond of it. I would have a tight stop loss, like under 65. So a tight stop on close under 65, and anything over 67.50, I think would be a good move. Take profits over 67.5. LVS, that was 78, at least till December 5th. These contracts are a lot better, a lot tighter. 65 calls. I like these. 12, 19, 65 calls. 12, 19, 65 calls at, what was it, 320 or less. All right. That's LVS. Now we got Monster. I've actually never traded Monster before. This thing looks like a monster. Up here, new all-time highs. Weekly, 195, 130, 78. There it is. That's a beautiful looking chart. Right, price shot up. It's been consolidating. I like this. So price has been, right, moving up higher. Looking like that. And it made this little shape, right? Like a bull flag is what they call it. That's what I've been trained to trade. This is this is my thing right here. This little bullish flag. All right. So again, price, I'm gonna say from 70 to 71. It's my ideal buy zone. Buy zone. This is a 78-minute chart. MNST. Oh, they only have monthlies, so you're absolutely gonna get these Decembers. These November 5ths are basically pure risk. If you like to be risky. So 11, 21, 70 calls at, what was it? At $2 or better. $2 or less. I'm gonna put ultra, risky, and aggressive. Stop out under 70. Take profits over 72. And then for a more conservative, we're gonna go 12, 19, 70 calls. 12, 19, 70 calls at 320 or less. All right, so that's Monster. I love the way the setup looks, though. Truly looks beautiful. Looks like the chart wants to shoot higher. What's the fib extension out of this pattern? Look, so it hit it, 72. Next one, 73, 75. 5 ATRs at 77. If this chart gets up to 77 this week, then I would definitely expect it to keep pushing up towards 100 by the end of the year. This thing's been squeezing since January 2024 and finally firing long this month, November. So all that energy wants to come out, and I'm sure it's going to do some beautiful things. Here we go. 79 is the TP3 based out of the monthly pattern. All right, last but not least, MU. So MU on the monthly has been killing it, right? Second month in a row. I mean, this thing has been shooting up since April. Most of the market has. Since April 7th, this thing's up 300%. All right, so it's absolutely a monster. Got a 195-minute setup here. They had earnings back in September, so earnings should be coming up soon. When is this? December 17th. Okay. They just set a new all-time high on Monday, November 10th, so last Monday. And, ideally I'd want to get into 29 to 237. This is ideal, 229 to 237, ideal entry. You don't always get the ideal entry, but for me, that would be the ideal spot. I would stop out under 230. So stop out on a close under 230. TP, new all-time highs. And what are these contracts looking like? This was a what? This is a 195. So we're going at least till December 19th, I think. All right, so 33 days minimum, 1219, 1219, 250 calls at, what was it, $20 or less? Yeah, 21.50 or less. Or if you wanted to run a spread again, I would cut less time. If you're going to do a spread, maybe December 5th. And these 245s by 250s might be ideal. Let's see. Yeah, 225. It's perfect. So 12.5. You could do a 12.5 vertical call spread. 245 by 250 at 2.25. Risking 1 to make 1. So you got two options. This is the setups. We went through everything. We went through the markets. We went through the news. I hope this helps. Like, comment, subscribe. If you got any charts you'd like me to check out, leave the comments. I'd love to help you guys out. I know trading can be hard, especially by yourself. Don't forget, IWM is already bearish. So any names in IWM, you want to either short or don't play them if you only like playing long names. I like to go to here to the ETF channel. You can type in IWM and get a list of the tickers. Look at that, over 2,000 shares, stocks. All right, so they tell you Bloom, LTD, IONQ, all these different names, all right? Plenty of pages of stocks that you can look at their charts and probably find a reason to short them. Riot, Atlantic Union, they tell you the ticker, AUB, then you just come over here, AUB. All right, look at the chart, and look, it's super, super bearish. Moving averages are to the downside. We got squeezes, and all I did was, a little bit of homework. ETF channel, type in the ETF, come find my setup, right? What's my setup? Stacked moving averages, consolidation, some squeezes. Check out if the options are decent. These options are horrible. So I would not be playing AUB, but that's how it works. Riot was another one. Look at this thing. From 22 to 13, this thing lost what, half its value? 44% in 18 days. Beautiful. So that's basically how it works. I hope this helps. Happy trading, y'all.